The end of the month, those words can send shivers down the spine of anyone in accounting, can't they? It's that time when the clock seems to tick louder, deadlines loom like storm clouds, and the pressure mounts to deliver accurate financial reports. But let's take a moment to unpack what this really means. The end of the month, or EOM as we like to call it, is not just a date on the calendar, it's a critical checkpoint for businesses of all sizes. Think about it, every transaction, every invoice, every dollar that comes in and goes out has to be accounted for. It's not just about balancing the books, it's about ensuring the entire organization runs smoothly. Accurate and timely financial reporting at the end of each month is essential. It's like the heartbeat of the business, providing a comprehensive view of its financial status. Without it, you're flying blind, unable to detect issues until they become serious problems. So, what exactly happens during this EOM process? Well, it's a bit of a marathon, requiring meticulous attention to detail. First up, we have bank account reconciliation. This is where you match your internal records with what the bank shows. It's like checking your score after a game. You want to make sure everything lines up. Any discrepancies, those need to be flagged and sorted out immediately. Then there's the task of generating invoices. You need to send out end-of-month invoices to suppliers and customers alike. This is where the rubber meets the road. If you don't get those invoices out, you're not going to see any cash flow, and that can put a serious dent in operations. It's all about keeping the wheels turning. Next, you prepare statements to send to customers. These statements summarize what they owe, and you want to make sure they're crystal clear. Clarity in communication can save you a lot of headaches down the line. And don't forget about paying taxes, payroll taxes, other taxes, superannuation. These are non-negotiable. They need to be handled promptly to stay compliant with regulations. Now, let's talk about the importance of having a standard operating procedure in place. You'd be amazed at how many businesses struggle with inconsistencies in reported entries simply because they lack a set process. If your team doesn't know what's expected of them, you can bet that EOM will turn into a chaotic scramble. Having clear guidelines helps everyone know their roles and responsibilities, making the entire process smoother. And here's where technology comes in. Utilizing reliable accounting software can be a game changer. It allows you to track finances in real time, quickly identify errors, and automate repetitive tasks. Imagine cutting down hours of manual data entry and focusing on more strategic decision making instead. That's the power of technology in accounting. But let's not overlook the human element. It's crucial to train your staff on EOM activities. You don't want to be in a situation where one person holds all the knowledge. By cross-training your team, you create a more resilient organization. If someone is out sick or on vacation, the work doesn't come to a standstill. Now, let's dive into the nitty-gritty of the EOM process. There are 5 key factors that every business should focus on: accounts receivable, accounts payable, account reconciliation, fixed assets, and financial statements. Each of these components plays a vital role in creating a complete picture of your financial health. Accounts receivable is where you document all the money coming in. Did you receive payments from customers? Are there outstanding invoices that need chasing? This is where you want to ensure you're not leaving money on the table. On the flip side, accounts payable is all about tracking what you owe. Have you paid your suppliers? Are there any invoices sitting in limbo? Keeping tabs on these expenses helps maintain good relationships with your vendors and ensures you're not caught off guard by unexpected costs. Reconciliation is where you match your transactions with bank statements. This is your safety net. It helps catch errors before they spiral out of control. It's a bit like a safety check before a big trip. You want to make sure everything is in order. Then we have fixed assets. These are the big ticket items that depreciate over time. Tracking their value helps you understand your overall financial standing. It's not just about what you have now, it's about how those assets will impact your future. Finally, we come to the financial statements. This is where you pull all the information together to create a clear snapshot of your business's financial health. The balance sheet, income statement, cash flow statement, these documents are crucial for making informed decisions about the future. Now, I know this sounds like a lot, and it can be overwhelming. But here's the good news: there are ways to improve the efficiency of your month-end closing. For starters, merging transactions into a single location can streamline your processes. Instead of hunting through piles of paperwork, you can have everything organized and accessible. Communication is key. Make sure everyone understands the company-wide cutoff dates. This clarity helps prevent last-minute scrambles and ensures that everyone is on the same page. And let's not forget about backups. In today's digital age, relying solely on paper is a recipe for disaster. Backing up your data is essential. Imagine losing all your financial records right before EOM. Talk about a nightmare. Utilize cloud-based solutions to keep your information safe and secure. Using templates and checklists can also save you a ton of time. Establishing standard operating procedures can enhance the efficiency and accuracy of your month-end operations. You'll find that having a checklist can help you stay organized and ensure nothing falls through the cracks. In conclusion, The end of month accounting process is not just a box to tick, it's a fundamental aspect of running a successful business. By maintaining accurate financial records, you can identify areas for improvement, ensure compliance, and ultimately set your firm up for success. So, whether you're a seasoned accountant or a business owner trying to navigate the financial landscape, remember this: the end of the month is not just a deadline, it's an opportunity to reflect, analyze, and plan for the future. Embrace it, streamline your processes, and watch your business thrive.